The first chart that I'll open up is the chart of Nifty 500. And again, it was not a great week for the market. You saw distribution further happening in the small, mid, micro cap space, specifically the SME space also. A lot of people, a speculative kind of people who were there in the market are learning some hard lessons, which is fine. This is how market functions. With the Nifty 500, for those of you who follow the teachings of Stan Weinstein, which is very similar to what Richard Wyckoff had taught, we are now in a stage 3 kind of a structure. See, this is a new 52-week high, but the way prices again reverted back, you can term this as a stage 3. So within Stan Weinstein's framework, potentially this is a stage 1 when the price keeps rallying up, that is stage 2, then a stage 3, and then if the breakdown happens and price moves lower, that becomes stage 4, something what a small cap index or a select IPO index. Can you see this is a clear stage 4 structure that is there? So this was stage 3, a breakdown here, and a clear stage 4. So we are not yet there in terms of broader market yet, but if you look at the relative strength chart, you'll understand that as price is moving in this particular range, the relative strength line vis-a-vis Nifty 50 is also moving lower. This tells you that the broader market is with every week getting thinner and thinner, and only handful number of pockets are still holding up, and those pockets are still holding up. I'll come to that in a bit, because I am using this volatility to accumulate some sector specific ETFs, because those structures are still valid. I'll explain all that, but that is what currently is going on. Last week I was talking about this long-term contraction also that is currently happening in the price. If price moves below this particular level, that contraction will become invalid, but you'll have to check Nifty 100, Nifty 200 and Nifty 50 also. Because what happened in November, actually in first week of November, the market breadth was improving. But week number 2 and 3, that is when the breadth actually started deteriorating a lot. You started seeing a lot of silent sell-off that was happening in the micro cap space, in the SME space. Then in December, that also started gradually spreading to the Nifty 750 index, which is the Nifty total market index. And now in January, you are seeing that is now spreading to Nifty 500 also. So if you plot a timeline, first the distribution began in the SMID space, then it moved to the total market index, which is the top 1,000 stocks. And now it is also moving to the top 500 stocks. Nifty 50 structure is still fine. I'll come to that in a bit. This is the ETF of Nifty 50, still way above this particular trending pivot. So the structure for Nifty 50 is still fine. It tells you that still handful of pockets are surviving whatever is happening in the market. So there are two ways you have to look at it. First, yes, a lot of things are there about valuation, about Indian growth story and those kind of things. I'm not someone who will switch my opinions so easily. I firmly believe that Indian economy is on a very strong footing. It's just that markets are not delivering returns. And you also have to understand why. See, currently, a lot of money is getting sucked out of the system through the IPOs that came out. Then gold and silver are doing exceptionally well. So there is a lot of euphoria build up there. You should look at what is happening in MCX. You should just go and look at the volumes that are coming in. If some of you track silver mini or gold mini or gold futures contract, just go and look at the volumes that are coming in. You'll figure out that people have lost interest from equity markets, and typically that is what happens, because globally you saw this happening with Bitcoin. People were losing interest in moving into Bitcoin, then Bitcoin started falling, then the AI theme came up, then there is some gold silver theme that is playing out in the US markets also. So that is becoming a global theme. Plus, yes, there is an earnings slowdown. I felt the results up to now have been relatively better, and perhaps in the next couple of quarters we can start seeing market price that in. But as of now, without doubt, the small mid micro cap space, the SME space, that is a space you have to be very careful. If you know inside out about a particular stock, then you should go ahead and start investing in it. That is completely up to you, but be careful in that pocket. I don't think the corrective price action in that pocket is over yet. If you look at the small cap ETF, now it is back to very close to this particular range, and it had fantastic rally between 2020 and 2024. So this particular space, if you see, again, attracts a lot of people in terms of speculation, and this speculative money has actually moved to other asset classes. If you look at the relative strength, it is at the lowest level, even lower than the previous low that was made here. So that is the kind of underperformance and decimation that is happening. This is MSCI India ETF. A lot of people, foreign people, invest in this. People who don't have direct access to Indian markets, mark out this level, see what price does in and around this level. This ETF is by Kotak Mahindra Mutual Fund. Structure is still fine. Structure is still fine. It is just that this is significant amount of volatility, and when you compare it with what is happening in other asset classes, obviously people don't want to pay attention. And it is right, because everybody has limited capital, they need returns. So what remains in a good structure still? See, as the volatility is continuing, I am accumulating ETFs that are showing strength, which is PSU banks, which is metals, which is auto Bs. So auto Bs is the ETF that has actually retraced quite a bit. So from this peak, it is down about 7.5%. So obviously, I would have a higher allocation here when compared to PSU banks or metals, which hasn't retraced that much. I'm also looking at ITBs now, because it has completed a corrective action in terms of Stan Weinstein's framework. If you see, this looks like a potential stage one structure. Some bit of contraction is also there. This is also a pocket that is not a investor favorite currently, because apparently if you go through the headlines and look at people talking about the IT sector, the only thing you hear is how we are lagging behind. We have no innovation. We are just service providers. Basically, these companies do nothing. That is the kind of logic. But if you look at the ROE, ROC numbers, it is one of the best in the world. That is how you have to look at things. And you need time frame. You need a little bit of time for these things to perform. I'm definitely looking, because consensus is not here. RS is also sort of bottoming out. No major allocation, but just sipping it. That is some SIP, weekly SIP, those kind of things. Then Bank Bs has also corrected. I think Bank is a pocket where there is some bit of consensus. So the more sharper this dip is, the better it is. And I have to tell you, this is not a blind buy. See, whenever the markets fall and after they rally, you hear all these quotes by Warren Buffett on the internet that whenever people are fearful, you should be greedy, and you should be fearful when people are greedy. I hope I said it right. So basically, when the price is falling, you have to take advantage of that. Otherwise, there is no use reading all these quotations. All right. So you need to put your money where your mouth is in terms of your opinion. And my opinion still is that our banking sector, our auto sector, metal sector, PSU banks, some pockets of financial services, private banks, public sector banks, these are still in fantastic structures. And the volatility, let's say something like Nifty Bank dips to this particular level, 580, 570. Let's say we have more volatility, more selling, I will still add, because my time frame for ETF addition is a bit different. This is not a trading market where you can trade momentum, because there is no momentum anywhere. But this is a market where you will get opportunity in terms of investing money for the future. If you don't make use of these dips, all right, whether it was this dip or this dip, and I'll give you one example. If you look at this index, this is the Tata Asset Management India Digital Index. So between September 24, September, the correction started. Look at where this index eventually bottomed out. It bottomed out near the previous consolidation range, so previous trending pivot. So if somebody understood this index, obviously he would have bought into the dip, so that over the next few months when the price moves up, you profit from it. The same logic applies for bank Bs. If bank Bs even violates this particular level, I would still accumulate, because for me this is the trending range, this particular range. I would only start taking some corrective action if price starts dipping below this level, and that would only happen when there is a massive crash globally, or something other happens. Otherwise, the way our policymakers are moving currently, mainly RBI, the way the liquidity is there, the way people are not interested in equities, this is the time to make use of all those quotations, and put your money for a little long term, not be a speculator from day to day basis. Unfortunately, what is happening in silver and gold is making people more speculative in nature, and I understand, because capital is limited. People want to make ends meet. People want to make quick money. There is taxation everywhere. I completely get it, but haste will always make waste. This is something you have to know. You grow your capital over time. You grow your money over time. In the short term, you can get lucky sometimes, but other than that, you will obviously have instances where it is over medium to long term, where the odds of you making money is a lot more higher. So there are pockets that are clear avoid. These are tradable pockets that are there in the market. So this is the Realty Index ETF, Motilal Oswal's. This is a clear avoid. There was some kind of base forming here, but it did not materialize. I remember attempting a trade here in a particular stock, Anant Raj. Now I can say, because that is over, and that was actually the stock that gave me maximum loss in the current financial year. I was trying to get in early, but then the stock just did not work, and I think it fell 12-15%. So, this is again a clear retest of 50 DMA, stage 4 structures. You'll keep this structure in mind and just keep seeing. There's the same thing, rejection at 50 DMA, and price just keeps heading lower. So these are clear pockets where you have to be careful. Unless and until you're a real long-term player in the market, you have to be careful in these pockets. Now, defense is a pocket that I'm still very much bullish on. I did a video also on defense sector, I think in 2023, why this could be our very own AI moment along with the capital market index. For defense also, even if I see sharp retracements, I would be interested in this ETF, because again, my time frame for defense and capital markets sector is not 3 months or it's not 6 months. I'm ready to wait patiently. Of course, this does not mean that if it falls to 74, I take 80% of capital and deploy. No, it is always a certain percentage of capital. Let's say your capital is 1 crore, you can deploy probably 2 lakh when it falls 5% or 6%. Start dipping your toes in the water just to see what is working, what is not. Again, this is not an investment advice. I have to specify this, although there is no restriction by SEBI on ETFs. So this is consumption bees. I don't particularly understand this sector that well, but the point is that there are plenty of opportunities. So this is the PSE and CPSE index. Budget is coming. I don't know if some announcement is coming, because the ETF made a new 6-7 month high and has retraced back because of the broader market. But PSE CPSE is also a pocket that, if you look at the index charts, they're still okay. Defense and capital market can be dark horse in the market if things stabilize. But as of today, the pocket of strength remains PSU Bank, metal, auto Bs, IT Bs. Commodity comes under metal itself, banks, financial ETF. So, and there is this quality, BSE quality ETF, because if you go and check Nifty 500 value index, that index is also doing well. So there is some move towards quality, you can see. But typically, I don't trade this ETF because I don't understand how the stocks move within this particular ETF. Private bank is also a relatively okay pocket. Has some fantastic banks, some of the best banks in the world. Let no one tell you that our banks are not good in terms of numbers. They are fantastic banks. And I've said this many a times. Go through the global data and find another ICICI HDFC bank in the world. It will be very difficult for you to find. And again, it's not an investment advice, but 10 years later, 15 years later, there are a lot of people who will do case studies on what fantastic opportunities were available in India in terms of banking sector also. Of course, this depends upon the kind of prudence that plays out in this particular sector, because you can already see, and I've spoken about this a couple of weeks back, there is a big time lending problem that is currently developing in India, and I think maybe government or RBI has to do more, especially between the age group of 24 to 34, where these people are spending money, the EMIs, that is just not in the right direction. Again, everybody has their own right to spend their money. Overall, if you understand nothing, no sector, no theme, no pocket in the market, look into Nifty Bs. Nifty Bs, again, go by Warren Buffett. He always states that 9 out of 10 people, or maybe the number was 99%, I don't remember, can't even beat S&P 500 ETF, which means over a period of time, you will only generate returns what Nifty generates. There are very few people who can do it. Okay, let's be very honest about it. If you don't understand any sector, if you don't understand gold, if you don't understand autos, metals, just stick to Nifty ETF. For Nifty ETF, have a systematic way of allocating more money. If you already are someone who is investing in ETF, and let's say you have picked up at lower levels, you see some sharp correction coming in, put some more money. Put 3, 4, 5% of your portfolio again in this ETF. If you have saved some money, put it. Because over a period of time, unless and until there is something catastrophic that happens, and that is always around the corner, especially given the global leadership that we have, irresponsible leadership that we have in the world, but you have your stop losses to take care of it. But corrections are always an opportunity in the market, and don't look at news flow, because that news flow is never going to be great. News flow is going to be all gloom and doom, and you're hearing about rupee, you're hearing about missed opportunities in gold, silver. You're hearing about a lot of things that are pushing people away from equities and pushing them towards short-term instruments and those kind of things. So this will always be there. And that is why it's important for you to define who you are. Whether you're a short-term speculator, then I think your interest has to be in what gold and silver is doing right now, particularly silver, because gold is something on this channel also. I had spoken 18-20 months back that what is going to happen with gold. Not silver. I wouldn't want to speak about what is happening in silver, because that is something I also don't understand. But gold is a proper asset. So gold is a long-term proper asset. Silver is something, if you get it right, fantastic. Really happy for you. But there's a logic behind gold, and there is sentiment behind silver. Let me put it that way. So these are broad assets that have done well. So in case you don't understand something, look at this. Look at Nifty ETF. There are plenty of ETFs out there in the market. If you want to replicate what FIIs currently do, look at MSCI ETF. Kotak Mahindra has taken out this MSCI ETF also. MSCI India ETF. A lot of foreign investors track this. And if you really want a broad term kind of ETF, then you also have this Motilal Oswal Nifty 500 fund, which actually tracks the Nifty 500 index. I think, I'm not sure, but this is what that ETF was. I just read a couple of lines of this ETF. So yes, we are in an exceptionally tough phase, and I don't think in the small mid micro cap SME phase space, that is this phase is going to get over so soon. But don't miss out on the pockets that are currently volatile or that might get volatile if fear spreads into the system. You will see sharp sell-offs in PSU banks, also metals, also auto has fallen some bit. Bank Nifty also can severely move lower if this is what continues. Remember the breadth stat that I share every week. As of today, 27% stocks are only above 200 DMA. Just imagine the kind of decimation that is happening. 73% stocks are now below 200 DMA. But this is the time not to run away, but to have a process and keep repeating it. That is if you're a pure equity guy like me. I don't venture into any other asset classes as such. Yes, gold is a different thing, so I don't want to comment on that. But apart from that, I'm not into commodities. I'm not into excessive investing in the US market or those kind of things. No, I have a firm hypothesis that Indian market next 20 years is going to be the best equities market in the world. If I'm wrong, then that's too long a time frame to come and apologize. But I'm pretty confident that that is what is going to happen to Indian markets. Else, you won't find any other market also delivering returns. So I need my focus. This is where my focus is. Yes, markets can go through some more tough periods, tough phases, but I'm pretty confident using the volatility to add to my existing ETF positions. Also, I'm not necessarily trading a lot because this is not the market where you trade a lot. But market is like a pendulum. It keeps swinging between trading phases and investing phases. So currently, we're in that investing phase of the market. Again, if you read a lot of quotes by Warren Buffett, have some plan to put those quotes in action. Else, if 12 18 months down the line Nifty is up 30% and your sectors are up 50 60%, and then you will revisit those quotes again, it's of no use whatsoever. All right, so I just want to thank you guys for coming and watching the videos. I know the comment section is off these days. It's very difficult for me to juggle out my commitments between personal life, what I do professionally, plus whenever I see some comment, I feel like answering it. That is why for the time being the comment section is off. In a couple of weeks, I'll start opening the comment section so that I can interact with all of you a lot better. But thank you so much for coming back every week and watching the videos. Have a great weekend ahead. Take care and be safe.